Welcome to the About podcast. Here we explore your financial health in simple and easy to understand ways.
All right, welcome to the About podcast. As always, my name is Jeremy Scott. I'm your host, and of course, I'm joined by Roy Hucke of Credentialed Wealth Advisors. How are we doing today, Roy?
Doing fantastic. We're gonna really try to stay that simple and concise intro there for the topic today.
Okay, yeah, the topic today it's the other unavoidable thing.
Yes.
Today we're talking about
death and taxes.
Yes, we are talking about taxes today. Everybody's least favorite thing would be my guess, though taxes do an important thing. I'm sure we'll talk a little bit about that. But I myself am not an expert in taxes. Roy, you definitely know a lot about taxes.
I stayed at a Holiday Inn Express last night, so
there you go.
Quite a bit.
But not an expert.
Not an expert.
At least not an expert in the way that our guest today.
I'm dangerous, and that's as far as I go.
There you go. All right. I know how to purchase TurboTax from Costco. That's what I know how to do. But yes, today we are actually joined by a very special guest, Lance Larson of CPA Group of the Rockies, which I assume makes him a CPA or a certified
public accountant.
Man,
are we right on that?
You are correct.
All right. Well, Lance, thanks for joining us.
Yeah, thanks for having me.
Yeah. Why don't you tell us a little bit about give us the 5-second overview of you and what.
How did you become a CPA, Lance? Let's go through that.
Oh yeah.
I always enjoyed working with numbers, and when I decided to go back to school, it was accounting was where I wanted to be, and it just sort of natural progression moved on to I need to become a CPA, and I started working for the CPA firm in 2001 and never left.
So what would be what's the day-to-day work of a CPA for those of us who maybe not in the know?
Yeah, my specialty is taxes, small business taxes, individual taxes. We also do a lot of bookkeeping, accounting, payroll, stuff like that kind of keeps us busy during the off season. But I'm mainly spend my days either looking at taxes, planning taxes, reading about taxes, or listening to people like Roy complain about taxes.
I usually call him and ask him a question, and the cool thing about Lance is he's like, "Oh, I'm not sure on that one. Let me look that up," and he'll always get back to me pronto, really, and always has the right information. So I've always appreciated that.
Yeah. I think for most people, they're kind of, if you work kind of a normal, W-2 kind of job, your experience of taxes is, the thing you got to do every, winter when you've got a stack full of, pieces of paper with random numbers on it that people sent you, and you go somewhere and get it done. But once you step into the small business world, like Roy has, it definitely takes on a whole other element, as far as what you need to understand about taxes and how they work and all the rest of it. And I can tell you for sure, when you become clergy, it becomes a whole other thing too. It's like we're a weird little group, us pastors.
Yeah, it's definitely a change. We have lots of clients that they are just W-2, but they don't necessarily need me. They use me because they're afraid. They want to make sure that what's being reported is correct, what they're paying is correct, and they just don't want to deal with it. And then you go all the way up to where it gets more complicated, where the average person would look at that and say, I have no clue if I can deduct that, if I can claim that, what that means, what that form does. And so it gets more complicated from there.
Yeah. Yeah, I had a case this year where I actually had to I got it all done early. I was so excited, and then I actually had to file an amendment because I forgot that my interest income, I got an interest income statement.
Much higher.
Yeah, and I'm like, oh, and I didn't realize that was going to come. I'm like, oh, I got to pay taxes on that interest I made? I'm like, oh, crud.
Yeah, we're so used to paying nothing on interest because it's so low for so long.
Yeah, I know. I'm like, oh, gosh, all right. So then I had to file an addendum. I kind of felt dumb, but that's what I get for being an overachiever. I was trying to be done by the end of February. So so thinking about, especially small business people or, whatever, when they start stepping into those more complicated tax situations, what is, Lance, from your perspective, what are a couple of the most important things people need to know or be on the lookout for, besides just, call you?
Yeah, the biggest the best thing the person can do if they're going to get their stuff together is be well organized. Have all your forms that have shown up. We send out organizers to our clients that can be used to see what they had last year. That'll kind of help them gather it. And small businesses get a little trickier because a lot of times it's on QuickBooks. And so the average person isn't a QuickBooks expert. They're not an accounting expert, but they're gathering the information. And the best thing they can do is make sure that they've met with the tax preparer during the year. Kind of helps because then they have the ability to kind of look at what they have and say, you can't deduct that. Let's move that out of there. Or, well, let's not forget about this, and make sure that that we have everything that that is deductible and organized.
So what do you when you're working with a typical client and you want to onboard a new client, let's say, what does that look like, and how do you determine if you can take someone or not?
Yeah, usually I'll meet with them and say, okay, well, let's see what you had last year. Look at last year's tax return, and you kind of work your way through and say, okay, well, last year you had a W-2. You have that this year? Yes. Last year you had a consolidated 1099 for dividends, interest, stock sales, and make sure that that's the same. Do they have royalties? And then you look at business, and for me, I look at it and say, okay, are they organized? Are they doing it correctly? And make sure that we have everything that they had last year, kind of talk about what they had last year and anything that's changed. Did they add a new business? Did they change marital status? Did they have a baby? And just make sure that that we have everything that they possibly could have.
So then you get all that in order. So then how do you say yes or no to a client at this point in time? Because I'm asking this question because everybody is asking me, like, Roy, I need a CPA. I need a CPA. I need a CPA. And I'm like, man, I know so many CPAs that are saying no to people right now.
Yeah, and that's true in our firm too. We've gotten so that we have to be very careful about who we take. And it's generally going to be, can I get the work done on time? Do you have anything that is going to make that impossible? And for small businesses, that comes down to being disorganized. If it's completely out of control, they look at it and say, well, first I'm going to have to do 20 hours of accounting just to get your QuickBooks to where they're clean, then I can't take you as a client right now. I just don't have the manpower or the time to do that. But if I look at it and it's nice and clean, well organized, then I feel confident that I can take them as a client. Right now, we're sort of telling clients, I cannot guarantee I'll have it done on time, which will lead into an extension, and which is perfectly normal and legal. Gives you an extra 6 months to get that stuff in order and file a tax return.
Oh, so being organized. So you small business owners out there, you need to be organized. Get everything organized in a concise way. And let's say that they don't know what that means in the tax world. Do you kind of help with that? Do you educate on that? I'm kind of working through that with you, by the way, Lance, on how to stay organized and how to make your life easier and not harder, so that I'm not missing out on things because there's just so much work to do around it.
Yeah, the best way to get organized is have a system. If you're going to use QuickBooks, great. If you're going to do it on a spreadsheet, great. If you're going to bring me a box of receipts, not so great. And so I encourage the use of something. And QuickBooks is a tool that's very familiar to a lot of small businesses. And then it's just a little bit of work trying to say, okay, you need to make sure you're reconciling your bank statements so that you've captured everything. All of your income is in there, all of your expenses in there. And then it just comes down to, are they in the right categories? And so you start looking through that stuff and say, okay, was this really a business deduction or was this a personal expense? And once you kind of get those separated out, you have basically what's left is going to be your income and expenses, and that's a good start to getting organized.
Okay.
What for you, Roy, you mentioned that you got people saying, I think I need a CPA. At what point in Lance, in your professional opinion, does somebody tip over from needing to needing professional help? that's the way we kind of want to say it, but I think we all need professional help from time to time, versus, just, doing the TurboTax or the H&R Block online or, whatever it is. Like, what is there like a point at which you're just like, yeah, you may want to think about?
Yeah, that's such a tough line to know when you've reached that. You start out and it's like, oh, you have a W-2, I don't need anybody. Well, good. Take care of it. If you feel comfortable doing that. Usually when you decide you need a CPA is when you get a letter from the IRS and go, oh no, I got a letter from the IRS and I don't know why. Mm. And so a lot of times that drives you there. Sometimes it'll be I started a business and so I don't know where to go from there. It could be that you inherited something that makes it more necessary to get some advice, or some other big event in your life that has kind of made you come to the realization that you can't do it alone, that you need some help.
Yeah, and from my perspective, being a third-party professional that partners with a lot of CPAs, right? And full disclosure, I do work with Lance, just so everybody knows that.
Yeah.
So,
I didn't figure he was
somebody. Anything there.
Didn't figure he was somebody just wrapped off the street, but yeah.
But I see personally with the demand on their time that if it's a W-2 situation, it's usually pretty simple.
Yeah.
And people can use a software program for that. But when you have more complexity, you need a preparer. But if it's the bigger the numbers, the more risk. So, you have to be careful with that too. So that even if you're all W-2, you want to make sure maybe you're having a CPA look at it if you're making a lot of money.
Yeah.
Just so you're not, one, missing out on opportunities that maybe you didn't realize, or two, you're not completely messing up the taxes.
Yeah. We had a situation once where something got missed and there was a 1099 that was in the packet we sent and somehow got lost or whatever. So we got an audit notice from the IRS. So it was like back in 2009 or whatever. But we had worked with somebody at that point to do the taxes, and then she kind of had to take care of it. I mean, she signed off on that return, and that was a nice advantage to having an actual person involved. Is that when there was a mistake made, because mistakes happen, or something like that, then there was somebody to also take care of it. We just sent her the letter and be like, what's this? And she immediately knew what it was and what had happened. And she's like, okay, we just need to file an amendment and do all these things and all that. And so I really appreciated that aspect of working with somebody who knew what they were doing.
Yeah, and tax law changes just about every year. Sometimes makes it easier, sometimes it does not. But there was some tax changes that made it easier for people to do their own, an increase in the standard deduction so that fewer people itemized, so they didn't have to worry about, well, can I deduct that or not? And some deductions that went away, some unreimbursed employee expenses that are no longer allowed. So it made it a little easier for a simple return to be filed on their own.
Yeah. Yeah. Yeah, I mean, I think it can vary. I will, like I said at the beginning, like as a clergy person, it was a little weird adjusting to the different, because we're our own like little unique tax class. And now, I mean, we talked before we got hit the record button here, but I'm leaving this place to go and sign on a house. And I was super excited about that, but that also means I'm moving. I had kind of realized like, I'm moving out of a parsonage situation, which has a particular tax structure around it, into a housing allowance situation, which has a different kind of tax implications on it. And I'm like, I have to think about that this year. And of course, I'm going to have a half a year in one and a half a year in the other, and it's just going to be good old times next winter, I think, in Jeremy land when it comes to
figuring it all
out, how all that works.
One thing you mentioned, Lance, was basically people when they want to engage, and one of the areas I see as a big inaccurate information that people kind of spout is that if you have an inheritance and people are like, well, I'm going to have to pay all that taxes on that money, and they don't actually know what that means. And, I'm dangerous, and I always make sure they encourage to confirm with their tax professional, but people really think they have to pay a lot more taxes on inheritances than maybe they have to. Like, what are some of the big, like, people are they don't understand this or that? Do you have any of those specific things you consistently run into?
Yeah, you see that a lot where they'll call and say, oh no, I inherited some money, I inherited a house, I inherited whatever, stocks, and how much am I going to have to hold back for taxes? And the truth is, it's not taxable to you, that you receive that tax-free at under the current laws. And so I get that question a lot every year. They're always relieved and happy that they find out that they didn't add anything to their tax burden, at least directly. Now, if they inherit a bunch of stocks that are paying dividends and they sell a bunch of them or whatever, then they have a whole different tax issue, but it's not based on inheritance. And so you hear that a lot. There's lots of misconceptions about tax brackets. Oh no, I've made more money. I'm going to be hit harder. I'm now in the 37% tax bracket. And so the hardest concept is to understand that you're only paying on additional income. So a married couple, the first $30,000 is tax-free because that's a standard deduction. And then you pay 10% on the next, say $10,000, and then you pay 15% on the next $30,000, and so on. And so when you look at tax brackets, you can be in the 30% tax bracket, but you really only paid an average of 22, and that sort of becomes a relief point when they find out that they're not paying 37% on everything. They're only paying on the increase or the amount over the prior level.
Yeah, I think it's a really important one for people that you have to need to realize. So if you make $35,000, your first $30,000 is tax free. If you make $300,000, your first $30,000 is tax free. Like it's only that it steps up, and it's only the money within that step
correct
that gets taxed that way. And so your effective, you might be in the 30% tax bracket or whatever, but your effective tax rate, like you just said, is actually going to be typically lower.
Yeah, unless you make, $20 million, and you're basically paying, 37-39% on everything.
Yeah, that first 30,000 is a rounding error by the time you've made,
that's right,
$20 million.
So marginal tax rate, effective tax rate, let's kind of break that down a little bit, because I know that's really the biggest hang up that I actually run into every day. And one of the areas that I'm curious how you handle that on educating the people who work with you, but your marginal rate, which is what you just said, tax bracket, right?
Right, correct.
So your marginal rate is basically the highest bracket you're in.
Correct.
Okay. And then your effective rate is all the tax dollars paid after deductions and all the numbers that you can pull off of the top, I guess, right?
Right.
And then divided into that actual number that's left.
Yeah.
Correct?
Yeah, you can take your what your total tax is, divide that by your total income, and you basically get your effective tax rate, and it's generally never going to be as high as your marginal rate.
So I usually explain to clients when I tell them this that simply, right, for every dollar you earn, if you're in the 15% effective tax rate, that you're going to pay 15 cents on every dollar you earn.
Right.
Easy enough way to explain it.
Yeah.
I think people understand it. They're like, oh, okay, that's not so bad.
Yeah, and your marginal tax rate is what you're going to pay on that next dollar. So if you're in the 37% tax bracket, you earn one more dollar, you're paying 37 cents on that dollar.
So for a client like that wants to take money out of their IRA, they're in retirement, they're in, let's just say they're in that highest tax rate, 37.5%. They want another $10,000. You're like, okay, but we're going to be taxed at, X if we take that money out versus if we take it out maybe next year and maybe a lower situation.
Yeah, you got to take all those into consideration, especially if it's December 30th and you think, oh, do I really want to take that out this year where I've already taken out a whole bunch, or I won a big, I won the lottery. Well, you don't want to stack that on top. Maybe you need to push that to next year and save yourself some money.
Or split it up into both years, right? Half this year, half next.
Correct. Yeah. Yeah. And all those come into play where you need to kind of look at what you're paying this year and what you think you're going to have next year and make a good decision.
Yeah, I know. I've heard it from people that like, oh, I got a big raise, except it's going to mess up my taxes now. And there is no situation where you actually like get a raise, even if that does move you up to the next tax bracket. There's no situation where you're actually then effectively making less money.
Correct.
I think that's the fear. It's like, I got a raise, but now I'm making less money because I'm paying more taxes. I'm like, no, that's not actually a thing. That's not, and that's why it works the way that it does, because it sound a little. When I first was explained to me, that sounds like, why would you do it that way? That feels weird. And then you're like, oh, well, that's probably part of the reason why. So you don't. accidentally get kicked up into, or you get a raise or something, you get kicked up to a new tax bracket, and suddenly you're actually effectively making less money. Like, that's not actually possible. Like, that's not a thing.
That is true, yeah. And I do hear that a lot too, and I've heard that all my life. I remember my dad when I was a kid complaining that I worked some overtime, I got a bonus, I got a raise. Now I make less money, and I never thought much about it until I became a CPA. And I think, well, that's not correct. Yeah, there's no way that you can take a step up in income and actually make less. Right. It may appear that you did because of withholding and stuff like that, but the actual tax is not going to increase so much that it eats up everything.
Yeah. Well, and bonuses are interesting because I worked corporate before I was pastor, and one of my first couple jobs had really strong quarterly bonus structures, and the first time, like, oh, you got X dollars in bonus, like, that's great, and then you get it, and you're just like, why are they taking so much out of my, why is the tax rate so high on the bonus?
Yeah, bonuses are kind of strange, and it really is a problem in the payroll department, because a lot of times bonuses are set up to automatically withhold 25%. Well, you're not in the 25% tax bracket normally, and so they over withhold.
Yeah.
So you get a bigger refund at the end of the year.
Yeah, it all kind of works out in the end, and hopefully it truly is a bonus. But,
right.
But yeah, I asked that question. That's what they said. It's like, well, it automatically is taxed at whatever the highest or whatever tax bracket is taxed at, and then, but worst case is the government's holding on to your money for you until April, and then get it back.
Yeah, that's the downside is, you're loaning them the money. No way to get it back. You can't just call the IRS and say, hey, I overpaid you. Could I have my refund early? Now you just have to wait until you file your tax return and get it then.
So, question for you on that, because we had that weird situation with me this year where we paid our tax bill, and we set it electronically, right? And then they tried to draft it. Twice. Now, if they had gotten the second draft, which didn't go through because I have the funds, in different, sectors, so they can't get to it. But if that had happened, would I have been able to get my money back, or would I just been out of luck?
In your case, we would have, because that was a 2023 overpayment, and so we could have contacted them and said, hey, you ended up with a double payment. We need that corrected, and it takes a little bit of time, and so you're sort of sitting there waiting for that, but in that case, we would have been able to get that back faster than waiting.
Okay. That's good to know.
Yeah, it is. So obviously one giant misconception we already talked about, which is that idea of tax brackets and what that does, that you're not going to make less money just because you're in a higher tax bracket if you get a raise or something. Do you find other common misconceptions that people have that you run into consistently when it comes to their taxes, or things that you wish more people would do? It's like there's a common thing that those of us in the day-to-day life are not accounting for as well as we ought to be.
I do get a lot of questions about how do I reduce my tax burden?
Sure.
And IRS letters are always scary, so I get a lot of first thing they do when you see it show up in the mailbox, and I'll admit I do that too, where I say, oh no, the IRS, they want something, and you start to panic, and a lot of times it'll turn out to be nothing. It'll be a letter that says, hey, we discovered that you overpaid and you didn't report this income, or you didn't report this payment, and so you either have an extra refund coming or you owe us a little bit of money. But don't be afraid of it. Just read it and understand what's in there, and call a tax professional if you have a question about that. And that's always a good starting point, is don't panic.
So don't put your head in the sand and ignore it?
Yeah, that's another good point, because that does happen too, where they give you 30 days to respond, and you wait 28 days before you read the letter. And so, don't be afraid of it, but don't ignore it.
So speaking of the letter thing, a lot of stuff I do is around fraud in regards to educating people about how to avoid being taken advantage of. Are there any, how do people know that's a bona fide letter? How do they confirm that this is actually from the IRS?
Yeah, that's a good question. There's certainly be tough to tell a fake, other than you look at it and say, okay, well, does it have an actual feel to it, that they have enough knowledge about your situation that you believe that it's you. The IRS will never call you. So if you get a phone call saying it's the IRS, you know it's not accurate. They'll only contact you by regular mail. They will never email you. They will never fax you. They will never call you.
So if I have someone call me saying that it's the IRS and that I'm going to be arrested if I don't, that's not them, huh?
No, that's not them. And you can just laugh and say, yeah, go ahead. Come on over. And
Send the sheriffs over.
so I'll be waiting here.
I don't know if you guys ever got that call, but I've gotten that call.
Oh, I've not.
Yeah.
I got that call a lot myself. And it's been a couple of years, and I just kind of laugh and think, it's hard to believe that works, but it does because people are afraid. And
well, that's the thing. You brought up that the number one thing with the IRS is fear.
Yes.
Right? They don't want to do something wrong. And you know, what did I ask you when you came on the podcast, right? Did you talk to your compliance about this, Lance, so that you're not going to get in trouble? Because again, it's that fear that drives us to take action. But when someone gets that call and they're afraid, you know, then it's fight or flight, and they want to deal with it, and they don't really pay attention to, is it real or not?
Right.
You know, is it the IRSS.com or even IRS.com, right? Like that's not even the real thing. I mean, it's IRS.gov.
Right.
Right. So
yeah, and if in doubt, don't call the number on the letter. You can find the actual IRS at irs.gov and contact them and find out if it's legit. But just be careful of any other way that the IRS contacts you. They're not going to show up and knock on your door either, unless they've been sending you letters for 3 years.
I don't know how many times I see Social Security stuff that I have for my kids, but and every one of them has this giant thing about fraud, right? They're like, you know, this is what we'll never call you, blah blah blah. It's just all this like how to avoid fraud, like in the correspondence from the Social Security Administration, because there's so much fraud. But I thankfully have not received a letter from the IRS anytime recently, so I'm not sure if they're doing that too. But I think it was really interesting when they're actually putting fraud disclaimers like in the actual documents from them. They're like, no, please don't do this. Don't be dumb.
yeah, because you're not only dealing with the IRS, you're also dealing with the state that you live in, right?
Yeah. You know, not every state has income tax, but the ones that do, you certainly have to be aware that they're out there too, and they're sending letters and contacting you if there's an issue.
No.
Yeah, that's that. This last year's ones with the whole Tabor thing was interesting here in Colorado, and you know, and all of that. And I'm just like, Colorado's weird. I don't know. It was like Montana had income tax, but it was pretty basic. So like Wyoming does not. I believe Wyoming does not.
Yeah, no state income tax.
Correct. Yeah.
Yeah, that's why everybody where we lived in Montana, because Montana doesn't have sales tax, and so all the stores had Wyoming license plates in the parking lots. Because you live in Wyoming where you don't have to pay income tax, and then you shop in Montana where you don't pay sales tax, and you know, I'm sure they probably and then spend it all on gas going back and forth.
Yeah. Next question I have for you, Lance, is one of the big things I run into is people make a comment about, well, I don't have any mortgage interest to write off. Or I'm going to pay off my mortgage, but I don't want to lose the mortgage interest deduction. Can you talk around that and like educate people around that? And you know, is it better to pay it off or to keep it in regards to the tax world? I know the math world where it's what's better, but you know, can you speak from your tax perspective?
Yeah. You know, with the increase in standard deduction now, very few people ever have enough to itemize, and keeping a mortgage is not a good tax strategy. You know, even if you could itemize, you're spending thousands of dollars to save hundreds of dollars in taxes. Isn't really a prudent thing. If the decision is I want to keep that mortgage for tax deduction, then that's probably not a good idea. If you're keeping it because the interest rate is so low that you can't do better by investing, then yeah, keep that mortgage going, but don't use it as a tax strategy.
Thank you. Thank
Yes.
you for saying that, because I try and argue with people about that all the time.
Well, because it's only the interest that's deductible.
Right.
Right.
But you paid, you know, let's just say you paid $10,000 in interest. You could deduct that, and you know, you're not getting $10,000 worth of deduction.
Right. Yeah.
So if you could pay that off and not pay the $10,000, you're ahead.
Yeah. Yeah, I think that's good. Well, though in clergy land it's nice because there's what's known as the clergy double dip, where the
do tell.
Well, so mortgage interest is deductible if you're a pastor, like it is for everybody else. But housing allowance money that you use to pay your mortgage with is taxed separately. You don't pay all the taxes on it.
So you don't pay FICA.
You don't pay FICA on your housing allowance. You pay Social Security and all that stuff on it, but you don't pay FICA. You don't pay it in the first place, but then you can still deduct it. So it's a little interesting, weird little loophole that I'm surprised they haven't closed.
If the IRS is listening, they'll probably
trust me, the clergy double dip is well known amongst, and I'd kind of forgotten about it until my fiance, who's also a pastor, we were looking over some stuff, and I'm like, what? Oh, that's right. You get to deduct that too. So
yeah, and that's strictly unique to
that's
to
clergy. Yeah,
It's,
clergy. We're a weird little bunch when it comes to taxes, and they don't tell you that the first. I mean, they kind of tell you that. There's some hand waving at it, and I didn't think much about it. And I think my first year after being a full-time pastor, I ended up with a $10,000 tax bill at the end of the year because I didn't pay estimateds or do all the things that I was supposed to do. So yeah, that was a fun little wake
up call right there.
Yeah, you got a lot more prudent about it after that.
So Lance, because you're in this crazy world of tax, do you mind sharing what's the craziest story that you've had with the IRS and dealing with them? Didn't know I'd put you on the spot, did you?
You can change the names to protect the innocent.
Yes, we most
right.
definitely will need to.
Yeah, I don't know if I have a fun story.
No, not fun. It's just crazy.
No.
What's the craziness?
We're always looking for some Schadenfreude here. He wants to.
You'll have to think about that for a second. See if I can think of a good story or an interesting story.
Well, you chew on it as we're going along here. But,
okay.
What's the most crazy client that's come in? Like shoe boxes full of receipts, things like that. I mean, has that really actually occurred to you?
Oh, it does. We had somebody that hadn't filed a tax return in 10 years, and they bring their stuff in, and they had to back a pickup load up to the back door so that we could haul it all inside. And we had probably 50 boxes of documents. And I just started working at the firm, and that was one of my first big assignments was go through every single piece of paper, look for tax documents. And he had a business, so he had to look for receipts that were relevant to that. And I spent the entire summer digging through boxes just to come up with a folder full of papers that were useful.
Oh, my gosh.
Wow.
That's crazy.
How do you not?
How are you not in jail if you've not paid taxes for 10 years?
I don't. I kind of have this illusion that somebody would, say, "Hey, by the way."
Yeah, he was in some pretty deep water.
I would think so.
But we spent almost a year getting everything filed and caught up, and and he had a lot of years that he had losses, and so by the time we kind of worked through that, it wasn't as bad as it could have been, but it was that fear that kept him from filing that first year. And then after the second year, you're like, well, no one said anything. I'll wait a third year. The next thing you know, you're 10 years down the road, and then the IRS notices you and forces you to fix that.
Words you never want to hear. The IRS has noticed you.
Yeah, and downside to that is if you had a year that you had a refund coming, if that year is no longer active, they don't give you the money. But if you owe them money, suddenly it's like, oh, that's an open year. And so they collect taxes, but they don't give you refunds.
So he lost out, though, on not filing on the years he had lost.
Absolutely.
And then do they penalize you for that if you don't?
If you owe money, they tack on penalties and interest, which can get pretty substantial if you have a big tax bill.
And if you don't owe anything, then they're not going to add any.
Yeah, if you don't owe anything, I hate to say that they could care less if you filed, but if they owe you money, no harm, no foul. But if you owe them money, yeah, they're coming at you.
So what in the world of deductions, because you said he had losses and all that, which obviously means he didn't make money. What you've run into, what are the things that people, especially for small business people, what is the most common things that they try to deduct that they probably can't? And then the other way, what are the people not thinking about? What are they missing out on in terms of deductions?
Yeah, one of the big ones that you'll see a lot is entertainment. Well, I like to take my clients golfing. well, under the new rules, entertainment is 0% deductible. And so you have to, you can take your client golfing, but you just can't take a deduction for it. But on the other hand, vehicles are a big one. Keeping track of mileage, keeping track of those expenses that a lot of clients don't think about, or home office deduction. If they're working out of their home and it's an exclusive area that they do work from, they don't think about taking a deduction for that.
Oh, yeah. I know the mileage one's big. I track my mileage, for what I do, and I just mostly, I don't submit it for reimbursement. I technically could, but I just hold on to it. It makes good for tax deduction. Like 55 cents a mile or whatever it is now. It's pretty decent.
It's up to 65 cents last year. I think it's 67.5 cents or something like that right now. And hopefully it's not a year that the IRS changes that rate in the middle of the year, because then it gets really complicated.
Oh, right. I remember they did that 2 years ago.
Yeah, a couple of years ago.
Yeah.
It's a much better deal when you have an electric car.
Well, I was just thinking about that. I wonder if it will change because of the electric car.
Hasn't yet.
And we briefly had the other question I wondered is, like, we had a plug-in hybrid for a little while, and so we plug it in at the parsonage and charge it, and you got like 30 miles of electric range. It was great, but I don't pay the electric bill over there. And I remember, I think I asked Jim about it once. He's like, "Don't ask those questions." I'm like, okay. I was just like, how does that work? But
those are definitely questions that you sort of keep to yourself and,
right,
and don't mention.
So, question for you, Lance. So if you're a business owner and you're part of like a service organization or something that's part of networking, part of giving back, and part of like you're representing your business, right? Do you get to write that off as an business expense by being part of that?
If it's anything that is designed to increase your business, it can be deducted, except for entertainment.
But what if those dues that you're paying have golf as part of it?
Yeah, then you have to sort of break it out and say, okay, well, what part of this is golf related? If the dues were exactly the same whether you golfed or not, then you might have an argument that it's all membership dues. But if it's increased because of golfing, or that's part of the included price, as it was calculated that you're going to spend this much on golf and this much on food and this much on whatever kind of activity that goes on, then you just kind of have to be careful that you break that out and only claim the legal part.
Got it. Well, and I asked that question because, there's a lot of groups that have like meals as part of it.
Yep.
And do you technically have to break that out?
Yeah, and if they break it out in the when they bill the dues, they say this much is for food for the quarter, this much is for just the dues to cover the ongoing activity,
meeting space, activities, all that stuff.
But if it's just all included and it's like, well, it doesn't matter if you eat or not, here's the total dues for the quarter and it's included in there, then usually you can just call those all membership dues and not break out that meal part, because you never eat, but you still pay the same price.
Got it. Yeah, there's some nuances there because, there's a lot of people that do golf to socialize, network, and, deals are done on golf courses, right? And deals for the nonprofit space just as much for the for-profit space. So it's one of those things where I know it's a gray area, but how do you break it out if that's actually something you're part of?
Yeah, and the IRS says if it's not broken out, you can't deduct it. And so if it's all lumped together as a activity, and it's broken out that you have $100 for meals and excuse me, and so much for golfing and so much as a donation, advertising, whatever, then great, you break those out. If they're not, if it just says golf tournament, then the IRS's stance is it's 100% non-deductible.
Got it.
Interesting. And when did that change?
Really, it was 2018 is when there was a big change on a lot of tax laws, and I believe that's when the entertainment became worthless other than for entertainment.
Right.
Before that, it was kind of like treated like meals. It was 50% deductible.
Oh, okay. Okay. Makes sense.
Yeah.
All right. Well, I mean, I think hopefully this has been I know for me really helpful conversation and one that I think people don't like to maybe spend a lot of time thinking about. I mean, I know I prefer that things are sort of on autopilot as much as possible. I've worked with the church here and to say, can you just send in my taxes for me so I don't have to do it every quarter, and they do that and that helps me out just because I don't like to, because I honestly just don't want to think about it more than once a year, but I probably should.
Well, I wanted to come back around to what you commented on earlier, was you had to do your taxes amended.
Yes.
Because of your interest, right?
Yes.
So I was curious, Lance, how do people understand, how are taxes or how are interest payments taxed? So just people can understand that in general, because I think that's actually a big area of misconception as well.
And we're all getting a lot more interest these days.
Exactly.
Yeah, interest is considered ordinary income, so it's taxed the same as W-2 income, same as self-employed income. As far as income tax go, it's not a capital gain and it's not a qualified dividend, so it's just ordinary income that you would pay the same as you do on your W-2.
So then, if a client asks me, Roy, is it better to get an interest payment or a dividend payment for a stock, let's say?
Yeah, if it's a qualified dividend, then it's taxed at capital gains, which could be capital gain rates can be anywhere from 0 to 20%, and so usually the dividend is going to be taxed at less than your ordinary rate.
Got it. Okay. So then, because dividends are just taxed differently, could be the same, could be different, just depending on your actual income bracket that you end up in.
Yes.
Okay. So then for clients to ask me that question, it's really just depends on what their goals are and what kind of risk they want to take, because obviously a stock is much more risky than just having money in a money market or a CD earning interest.
Oh, yeah, absolutely. Yeah, you sort of have to find that fine line between risk and reward. Save on taxes or invest in something that doesn't perform well.
So in that, guys, there's these things called municipal bonds that are tax free, right? They pay interest tax free, supposedly.
Right.
Are there situations where someone would have to pay taxes on a tax free bond that's from a municipal situation?
Generally not at the federal level. You can at the state level, because those municipal bonds are only tax exempt if they're Colorado bonds. And so you buy something that is an out-of-state bond, then you pay Colorado tax on it.
Got it. So then if somebody earned too much money, I guess let's back up. So if they have tax-free income that's coming in, is that added into any of their calculations, or is that completely hidden from the federal government?
It's reported, and it does come into play if you're talking Social Security and how much you're paying for Medicare. You have to add back in those tax-free numbers, and so it can come back around to increase your Medicare payment that you're required to make.
Got it. So then that's something that I think the listeners need to be aware of, especially when you're in retirement. Mm-hmm. And this is a big thing. So taxes are a pretty big deal. If you take extra money out of your IRA, or if you get too much interest income, that can go against you in regards to the premiums you're paying for Medicare.
Yes.
Do you know what do you know what the first limit is? I can't remember off the top of my head either, but
I don't know what that is right away.
It's different if you're single versus if you're married, right?
Yeah, if you're single, it's not that high.
Yeah. And that's actually a big deal. And this is one thing. I have a lot of business owners and I have a lot of widows as clients. And that's one thing that people forget about is when you have this, big retirement account is, do I take out money today or do I wait until the future to take the money out? Well, the odds are that if you're married today, you're in a higher, or I should say broader tax bracket, right?
Right.
But if they wait to take it in the future because they don't want to pay the taxes today,
right,
then you become a widow, and now your tax bracket just got compressed. So you think you're doing something good by paying taxes later, but in reality, you're actually paying more taxes in total because you could have taken it out today at a lower rate than in the future. Even if you didn't need it, you could just reposition it.
Right.
But that's actually a really big tax conversation I seem to consistently have with people.
Yeah, no, that's probably a good point because, they get, the tax bracket gets cut in half roughly. And if you're still making the same income, you just doubled your tax.
Yeah.
And so you have to be a little bit aware of that and timing of taking money out or getting income that you can avoid.
So how do you advise people, to deal with that? Because that's such a, what are the taxes going to be in 15 years? We have no idea, right? But I always, question, we have 34 trillion in debt in this country now, I think is where we're at. Is our taxes going up or down, Lance?
Right now, even though you may think they're high, they're historically they're amongst the lowest that they've ever been. And so there's no way they're going down, or at least permanently.
Unlikely, let's say it that way.
Yeah, unlikely. There you go. And so I think you can count on it being higher in the future, either to cover the debt that we already have or future debt. You have to be kind of cognizant that by the time you retire, you're probably going to be paying higher tax than you are now.
Oy vey. I don't like hearing that, Jeremy.
Yeah. Well, and I think this is one of those reasons you need a plan and you need people on your side. We've talked about this before. The purpose of working with a planner, or a tax professional, is for that purposes. There's all these things. You're all talking all about this stuff, and I'm like, well, that's really interesting. I'd never thought about that before. I'm not anywhere near retirement, so that's probably part of it. But this is the first year I had in investments that paid any amount of interest that was interesting that weren't retirement investments. And so I called you, and I'm like, I gotta pay taxes on this? And he's like, yeah, buddy, you do. And I'm like, because I'm used to, if I'm looking at my investments, it's typically my retirement investments, and I'm not thinking about it in terms of tax impact this year. And you're like, but no, that's still income. You made it. You got to do something with it. I'm like, oh, okay. Which made sense once I kind of thought about it for a minute, but I just haven't run into it before. So
well, and that's a perfect segue into regards to the professionals that you need in your life.
Yeah.
Right. Are typically the financial planner. You need a CPA that and there's differences out there, Lance. Maybe we should talk about that real quick, just to make people know. You can go to someone who does your taxes, but that doesn't necessarily mean they're a CPA. So why would somebody use a CPA over the term as an enrolled agent? What's the difference?
Yeah, really, there's a lot of education involved, a lot of continuing education that is not required and not overseen by anybody if it's just a tax professional. Not to say that that's bad. I know a lot of tax professionals that aren't CPAs but are very good taxes. But I'm required to have 80 hours every 2 years of continuing education. It is my profession, and so I keep up on current tax laws that some may not. Not all CPAs are the same either, because some of them may do taxes, but they're not really tax professionals. They're accounting or they're auditing, and you just have to kind of ask some questions and make sure that the person that you're engaging to help you is qualified and is on top of everything.
So then as a CPA, and my understanding from just talking to you in the past is to know if you're going to be working with a CPA or not, or I shouldn't say that, but if they have the name CPA in the name of the company, there's CPAs in the company.
Right.
It's owned by CPAs, actually.
Correct. Yeah, you can't call yourself a CPA firm unless at least half of the owners are CPAs.
Perfect.
okay.
So that's important. Just an important thing for people out there to know if you're looking at a firm, are they CPAs or not? It's kind of like the CFP, Jeremy, where you have the certified financial planner, right?
Right.
And I have to just go through more stringent education. It's not that other financial advisors aren't good,
Right.
but they just don't have to go through that same thing with Lance on his side of the aisle.
Yeah.
That's how that all works out.
Which, is important for those of us who, are kind of lay people in this whole thing and just want to know that we're doing something, good and work with somebody good. There's lots of ways to do that, but knowing that somebody has the education and and is accountable to some some group around the quality of their work and everything. I mean, I think it helps me. And in both these situations, this is one of those kind of, I know I bristle every time I got to spend money on something that I maybe don't want to spend money on, but spending money on somebody to help with your tax situation, everything like that, is a spend some money to save some money kind of situation, because there's a lot of ways to end up in a position where you're paying a lot more than maybe you ought to be paying. Especially if you start getting into a world where there's, can be penalties or fees involved if you're doing something wrong, even if it's inadvertent. So, I mean, that's, what you're buying also by working with somebody professional, I think, is also a little bit of like insurance, if you will, that helps you sleep well and know that you're doing the best you can and all that. Because if I look at my total tax burden and what I pay, I mean, for me, it's a lot of money. I mean, it's not to anybody else, but I'm like,
You don't get into clergy to be rich, Jeremy.
No. But I mean, we're not. I mean, it's still thousands of dollars. I mean, every year, you're paying in taxes. So I mean, you to make sure you're paying. I don't mind paying my fair share, but I don't need to pay more than that.
Well, and we have a big saying, and I'm sure you've probably heard this before, Lance. Is it's not what you make, it's what you keep.
Right.
So at the end of the day, it's like, how do you position things to be the most tax efficient, play within the rules, and make sure that Uncle Sam doesn't have to have more than he's due.
Right.
What do you think about that, Lance? I don't know. Do you like paying taxes, Lance? What's your stance on this? Maybe you enjoy it.
No, though I would gladly be in that 37% tax bracket instead of the 15% bracket. But absolutely, yeah, you want to pay as minimal as you can and still be on the legal side of things.
Right.
And so sometimes making sure that you're getting good advice and that person can ask the right questions and get every deduction that you're allowed and take advantage of any credits, any kind of help that you can get, I think is good. But ultimately, when you get to the bottom line, if you've done everything you can, you just say, well, that's just the way it is.
Yeah. Well, and that's, I think, why you and I cross over a lot just with our professions, because, the decisions that we make on my side can affect, the Lance's side, and how do we make sure those decisions are made in a way that's to their best benefit. But even how we just talked about, maybe you pay a little bit more in tax today, though, so you're not paying a bunch of taxes in the future, from joint, married to single in the future. Those are just things you have to think through. We don't know the future, but we can just educate, and education is the biggest part of that. So if you have a financial planner, you have a CPA, and then the third real big piece of most people's financial situation is having an attorney that has drafted the proper documents for what they need on the back end. Because you can have a great plan, but it can all unravel if you don't put it together properly.
Yeah, absolutely. Well, I think this has been great. I know I've learned a lot.
Taxes are always great.
Taxes are always great. Who doesn't love talking about taxes? Any other Lance? Thanks for coming and joining us for the podcast. It's always good to have people in who know what they're talking about. I mean, Roy's obviously an expert in many things. I'm an expert in a small number of things. But it's always good to have people who know and love, a particular world, and taxes is not maybe everybody's favorite subject, but it's an important one. It'll touch us all. We will all pay something sometime.
Death
somewhere.
and taxes, baby.
Death and taxes.
Any last things to add? I guess.
No, thanks for having me. It's been interesting, and I appreciate the opportunity.
All right,
you bet.
All right. Well, Lance, thanks for joining us, and shout out the work CPA
Group of the Rockies.
Is there a website?
There is CPA Group CPA GR. Yeah, I still go back to the old one, which is co-cpa.com. And that will direct you to our new website.
All right. Well, I'm sure the link will be in the description of the podcast and everything else, so you can check that out. So, all right. Well, thank you, Lance, for joining us. Roy, thank you as always.
As always, it's great.
All right. And well, this has been the About Podcast, the podcast about, this time, taxes. Next time, let us know if you're able to reach out and let us know if there's topics or things that we've talked about that we want to explore a little bit more. Feel free to reach out. We love to hear from everybody. And don't forget, like, subscribe, whatever it is you're supposed to do. Share it on social media, blah, 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 blah.
Thanks, everybody.
Thanks, everybody.